Micron reporting results that were above what the street was expecting and offering a solid forecast for the current quarter. Those shares are up nearly 100% since the start of the year. Joining us right now with more on the chip sector is Vivek Arya, the Bank of America Securities senior semiconductor analyst. And Vivek, people keep asking this question. Is this huge surge in spending that we're seeing in the AI equipment sector really going to continue? I guess this suggests it is. What do you think?
Yes, good morning, Becky. I think Micron's results are a very positive indication for the sector because memory is so pervasive in every piece of electronics, whether we are talking about data center or PCs or smartphones or any other piece of electronics in industrial and automotive. So Micron's strength, I think, bodes extremely well. I think the big picture view is that AI is having a very positive effect on the sector. It's part of an infrastructure cycle. You know, past infrastructure cycles have lasted 10 to 15 years. If you look at 4G, investment started in 2009, right, went on till 2020 almost, and in some places still continuing. So these infrastructure cycles can last for a long time. We are still in the first, third year of investing in AI, and we think this can continue. And this has a very positive effect on the semiconductor sector demand.
And you say, you're looking at this, I mean, Micron is rising at an even faster rate than its peers. What's your rating on the company? What do you think about the company even after it's nearly doubled this year?
Sure. So when we look at the AI sector, the names we like the most are Nvidia and Broadcom, and then some of the indirect beneficiaries that are Lam Research and KLA and Cadence Design Systems. We have been more neutral on Micron because in memory, demand is always very strong. Predicting pricing is tougher. And pricing in memory is as much a function of demand as it is of supply and incremental supply. But we think that when we look over the next several years, that companies that will benefit from this AI sector are not just going to be in memory. I think they are going to be companies such as Nvidia and Broadcom who can bring together the combination of silicon and software and scale and a complete supply chain. And in the case of Nvidia, also add a lot more developer support. So they will be able to monetize a lot more of this AI ecosystem. So for every $100 that is going to be spent in implementing AI, we think Nvidia's exposure to that will be 60 to 80%. Memory is going to be about 15 to 20%. So we do think that what the accelerator companies, what the processor companies are doing is just going to be larger and more pervasive in the AI ecosystem.
So despite these strong results, you wouldn't be telling people to buy Micron here?
Yeah, as you mentioned, the stock has had a very strong run. Usually these memory companies trade on book value anywhere between 1 to 3 times book value. The stock is trading closer to 3 times. See, it's executing extremely well. It's in the sweet spot of growth, so no doubt about that. As I mentioned, what is harder to always tell about memory is the forward pricing. And as we look into next year, there will be more competition from Samsung coming into the memory market. But if you're Nvidia, having more competition in memory is actually a good thing because that is part of your input cost. So the more suppliers you have supplying memory, that's the reason we would prefer to go within Nvidia or Broadcom, for whom having more competition in memory is a positive for their margins.
But what you said is kind of phenomenal. For every $100 that's being spent on AI equipment, Nvidia is going to get $60 to $80 of that, Nvidia alone?
Absolutely. If you look at, this year, the investments in AI infrastructure have been $250 billion, and Nvidia's data center business is probably going to do close to about $180 billion. So they are the biggest beneficiaries of this because the most important part of that AI server is the Nvidia GPU, right? A traditional server is priced at $8,000 or $10,000. And racks that have Nvidia servers are priced on the order of millions of dollars. And they are the ones benefiting the most from this build out. And for what it's worth, the stock is actually trading right around or even slightly below the day ChatGPT was launched in 2022. If you look at Nvidia's forward multiple of about 30 times, it's actually lower than the day ChatGPT was launched. So from that perspective, we actually think the stock is, not just showing very strong growth, it's also very compellingly priced from a valuation perspective.
So the stock's trading at just under $180. What's your price target?
$235, which is essentially the company trading at about 1x its earnings growth. If you look at other Max 7 companies, other large cap growth peers, even the S&P 500, you'll see that companies tend to trade closer to 2x earnings growth, and Nvidia right now is trading closer to 1x earnings growth. I think what the company has been caught up is a lot of overstated concerns about China, about competition from Broadcom. But we think that the OpenAI announcement that they just made, tells us two things. First, that Nvidia will be extremely well engaged with the Western AI ecosystem, which is going to be much larger than whatever is being built in China. And number two, the preferred vendor status that they have with OpenAI suggests that they will have a very strong market share as that disruptive company builds out its AI infrastructure. And, I think that investment is a force multiplier for everyone else in the AI ecosystem, that when you have a disruptive force such as OpenAI investing to this extent, I think it puts pressure on every other hyperscaler to invest. And we think companies such as Nvidia and Broadcom are very well positioned to benefit from that build out.